Hello, everyone, and thank you for joining us for today's webinar. Today we'll be discussing the Choppiness Index. Before we get into that, though, we are going to start with a little recap of what we have covered in the past. And I'll begin by describing technical analysis as a trading tool used to evaluate assets and attempt to forecast their future price movement by analyzing statistics gathered from trading activity, such as price movement and volume. We mentioned that unlike fundamental analysts who attempt to evaluate an asset's true intrinsic value, technical analysts focus on charts of price movement and various analytical tools to evaluate an asset's strength or weakness and forecast future price changes. And we also discussed how technical analysts believe past trading activity and price changes of an asset are better indicators of the asset's likely future price movements than the true intrinsic value of the asset. So right now we're on NetDanya chart station, looking at Japanese candlestick chart, which is a combination of a line chart and a bar chart. And what it does, it shows price movement over time. So here along the horizontal axis is where we have our time, and along the vertical axis is where we have price, which is separated by pips. Pip would be the fourth digit from the decimal place. And we see that we have in here two different types of candlesticks. We have our reds and our greens. And each candlestick has two parts to it. You'll see the colored part and the spike above and below. So let's zoom in on this. Just one moment here. Okay, so let's zoom in here on this candle. We see a green candle here. It's showing a price increase for a specified time period. Now, before I go on, what is that specified time period? Well, you'll notice here that I have 15 selected. That means that each of these bars represents 15 minutes in time. This is my time scale, and then in the time scale I could choose between 1, 5, 10, 15, and 30 minutes, 1 hour, 2 hour, 4 hours, or 8 hours, day, week, or month. Month meaning I can have each of my candles set to a month in time. All right, so let's look at this one candle right here. You'll see that it has two parts. Let's talk about the green part first, which we would call the body. And so if it's a green candle, it shows a price increase for the specified time period, meaning the bottom of the body would be the opening or starting price of the period, and the top of the body would be the last or closing price for that period. So you'll notice also these spikes above and below, which we can call wicks, shadows, or spikes. They show the price range for the time period of this 15 minutes, even though the price started and ended here. The price went as high in that 15 minutes is here, and it also went as low as here. So that's what is shown by the spikes. So moving on to this red candle, which shows a price decrease over a specified time period. So that now the top of the body would be the first or starting price of the period, and the bottom of the body would be the last or closing price for that period. The spikes above and below would be exactly the same. The top spike would show the top price, and the bottom spike would show the bottom price. Okay, so that is Japanese candlesticks. I don't believe we'll have time to go over support and resistance like we usually start with, but I have had a request to cover RSI quickly. So we're going to go back to the RSI, which is the Relative Strength Index. And it's a technical momentum indicator that compares the magnitude of recent gains to recent losses in an attempt to determine overbought or oversold conditions of an asset. So let's just look at a couple examples here. You'll notice I have an RSI down here. Now if I wanted to close it just to show you how to add the RSI, you come up here to Studies, and the pop-up window opens, and you click RSI, Add, OK. And here's my RSI. You'll notice it's on a scale from 0 to 100, with 50 is what we would call fairly priced. And we have two specific levels in mind here, 30 and 70. 30 would tell us that asset is oversold, and we can think of oversold as underpriced, and it's telling us that the price is likely to reverse back upwards. while on the other hand, 70 would indicate to us that 70 or above, sorry, would indicate to us that an asset is overbought or overpriced and likely to retreat downwards. So I'm going to show you two brief examples of how we can use this RSI for trading. So let's look first at the USD CHF. Just one moment here. Okay. So since technical analysis involves the study of past price movements, that's exactly how we're going to learn it. We're going to rewind, go back in time, and see how we would have used the RSI with CHF here, USD CHF. So let's push forward from this point, and now what we're going to be doing is looking for this RSI to dip below the 30 mark. And you'll see I've drawn a line here just as a visual aid. For those of you who want to draw lines, you would select lines, go to add lines, horizontal freehand. It changes your mouse into a drawing tool. You can start to draw lines wherever you choose, even on the RSI. Okay, let me delete these lines one moment. So we're going to follow price as if we're following the market live. We're going to fast forward a bit and see what happens if that RSI dips below 30 like is happening right here. So the next thing we do once the RSI dips below 30 is we wait for it to cross back above the 30. And let's see. So we have that happen right here. And that would be, you know, right here, probably around the bottom of this candle. And you see that we're on a 2-hour chart. So we're going to use the rule of Quattro, which means we're multiplying time scale times 4 in order to figure out what expiry is best. So we would go with an 8-hour expiry there. And in an oversold condition, it's telling us to take a call position from this candle, somewhere around the end of this candle, for 8 hours. Or on this chart, it would be 4 bars. So let's see what happens 4 bars later. 1, 2, 3, 4, and the price is certainly higher than where we would have taken that trade. So that would have been a winner for us. So let's see, spot any other opportunities. Okay, very close, but we actually need to see the RSI dip below 30. Remember, we're watching down here. And you're going to notice that the drop to 30 is going to be accompanied by a downtrend up here. So let's see if we have 1 or 2 more examples and then move on to our next example. All right, RSI crossed below 30 here and crosses right back above the 30, probably right around this area between these 2 candles. And so this is a good place for us to take another 8-hour put had we been in front of the computer at that time. And you do see 1, 2, 3, 4 candles, which is 8 hours later, that the price is much, much higher. So that would have been an easy trade for us. And let's see if we can find another opportunity. And remember, we're watching down here for the RSI to cross below the 30. It's coming close. It just touches the 30. So, okay, here it breaks below the 30. So now we're waiting for it to cross back above the 30, and that happens right after. So here, this candle is where we could have taken another 8-hour call. Let's see what would have happened in that instance, and you do see a strong increase thereafter. So that would have been a healthy decision for us. Let's see if there are any other opportunities. And we're watching down here, remember, for that RSI to go below 30. Let's see if there's another example. That might be it, but let's just find it. Okay. Here we have a strong, strong drop, and it breaks the 30 mark. Now we're waiting for it to come back above the 30. We're not taking a trade until we see the RSI come back above the 30. That's where it's telling us the price is retreating in the other direction. And it does cross briefly right here. So according to the strategy, we would have taken a trade right around here for 8 hours. And if it's a call, Okay, so we do have a price that ends higher. It does come back down, which could keep you on your toes, but you do see if we taken the trade down here, okay, that's where actually no, probably would have been a little bit higher. But as long as our expiry is one pip higher than the entry rate, the strike rate, then we're good to go. We get the full return. So let's see if there's okay. Let's look at one more example in the other direction, because we can also use the RSI at the 70 mark. So let's open up a different asset and rewind. Yeah, this seems like a good place to start. Hold on. Okay. Let's begin. Now we are watching the RSI again down here, and we want to see this time that the RSI crosses above the 70 point. Okay, and we have the crossover here. So now we're waiting for that RSI to cross back below the 70, and it does right here. So that would have been right between these two candles, where this time we would take a put position because it's indicating to us overbought conditions. So we would have taken a put position. So this time we're on a 30-minute chart, and we're using the rule of Quattro again, so that would be 2-hour trade this time. And again, it would be 4 candles on this chart. So let's see what happens. Had we taken the trade here, it would have ended down here. That's a deep, deep in the money trade. So let's see if we can find another example. So we're watching the RSI down here to cross above 7. Okay. We have our cross above. Now we're waiting for that RSI to cross back below, and that happens right here. Okay, right between these two candles, right in this area, we would take another 2-hour put, and had we done that, we would have been deep in the money. RSI prevailed again for us. So let's see if there's another example. We do have the break right here. I missed it, but okay, so if we took that trade for 2 hours there, 1, 2, 3, 4 candles later, the price does happen to be lower. One more example, maybe. Let's find. Okay, we have the RSI break 70 here, and then it falls back below, right between these two candles is where we would take another 2-hour put. And this time, 1, 2, 3, 4. Wow, okay. Had we taken 2.5-hour put, we probably would have lost the trade. But since we're sticking to the rule of Quattro, that would have been an in the money trade. Very nice. So we have 2 things left to cover today. I'm going to finish today's session with some stochastics 60-second trading. But first, I want to talk to you about a new indicator that we have not yet discussed called the Choppiness Index. So now we're going to switch from NetDanya to TradingView. Okay. And you'll notice my Choppiness Index down here. It's the bottom. So using the Choppiness Index is one easy way to understand if an asset has a strong trend or if it is in the early stages of breaking. Some traders prefer to trade within a defined range, while other less risk-averse traders will wait for breakouts in order to potentially capture a better reward. The Choppiness Index provides traders with a good indication of when price action is more or less volatile depending on conditions. Similar to the RSI, the Choppiness Index is an oscillator, meaning the value of the index trends between 0 and 100. So there are 2 distinct kinds of price action measured by the Choppiness Index. One would be choppy, which refers to sideways trending price action, like here, and not choppy, which suggests an asset is trending either upward or downward over time, like here. So if the indicator shows a value closer to 0, it suggests that price action is not choppy. Whereas if the value of the index is closer to 100, it's saying the price action is very choppy. So there are also two key levels in this index, and you'll see the dotted line highlighting them here is 62.8. So 62.8 and above indicate price action that is choppy and indicative of greater likelihood of horizontal range-based price action. And then our other level is 38.2 and below, which means price action is less choppy and more inclined toward a directional trend. So oftentimes these two levels are used to determine potential turning points in price action that can either include a breakout or a strong confirmation that the asset is involved in a strong trend. As a result of these levels, there's two major strategies that draw on the choppiness index. One is a follow the trend strategy when conditions are less choppy, and we also have a breakout strategy for when conditions are exhibiting more choppiness. So the trend following strategy is shown. A strong directional trend would be shown by 38.2 and lower. Commonly used strategy is to establish positions in the same direction of the trend as long as the choppiness index remains below 62.8. And when initiating the positions, whether bullish or bearish, is to enter when the index is below the 38.2 level, which is a commonly used strategy. And then there's the breakout strategy. When the choppiness index remains above the 62.8 level for a long period of time, the ideal strategy is to wait until the indicator moves below 62.8. And the move below this level is an early indication that a directional breakout and a new trend are underway. And if the choppiness index continues to move towards 38.2 and below, it is a strong signal to maintain positions in the direction of the breakout. Okay, so let's zoom in here and see if we can match up what's going on between these two. Okay, so we have our two levels. Sorry, 62.8 and our 38.2. Okay, so we are looking first for less choppy conditions. Now, something I've noticed, that this is my favorite way to use this indicator, is a combination of the two strategies I just spoke about. This would be a trend following strategy. However, I don't want to wait for my price to be below 38.2. What I like to do is after the choppiness index hits a high point and you start to see it come down in a smooth line going towards 38.2. Now that is when I like to establish my position. Now it's very important to notice that just because the choppiness index is going down, it does not indicate a bearish sentiment or put position. It merely indicates a strong trend forming. It does not tell you the direction. So let's look at the chart and the choppiness index at the same time. You see, as the choppiness index smoothly goes down, it's accompanied by a very strong trend. Okay, so that is when I see this line happening, maybe up here is where I would like to take my trade. And, for a quick expiry while I ride that trend down towards the 38.2 line. Again here, as you see this choppiness index smoothly start to retreat down, you notice a very strong trend down here. And I want to show you that this can be used in the other direction as well. So here I have my choppiness index decreasing very smoothly, and it's showing me a strong trend. This time it's an uptrend. So don't be confused by direction. This is merely to indicate the strength of the trend and levels of choppiness. So my favorite strategy is to wait until the choppiness index is high and then watch it drop down smoothly. And if I see that smooth drop down, whichever direction the asset's heading towards, that's the direction I'm going to take. I'm going to ride that trend. I'm going to follow the trend. Okay, so that would be our choppiness index. Now, we're going to talk about one last thing that we have discussed in the past, and it's backed by popular demand, would be the stochastics. graph we have here. Right above our choppiness index, we have a stochastics chart. So this technical indicator dates back to the late 1950s and has stood the test of time. It was developed by George C. Lane. The stochastic oscillator is based on the observation that as price increases, closing price tends to be closer to the upper end of the price range. In downtrends, the closing price tends to be near the lower end of the range. All right, so like the RSI, stochastics help us determine overbought and oversold conditions. And so let's find out how we are going to use this RSI. The stochastics. It's like the RSI in that it has two levels that we're on the lookout for, but instead of 70 and 30, it would be 20 and 80. Now, to add this indicator to TradingView, come up here to Indicators, and you'd simply select Stochastics right here. Okay, so we already have it added. Now, one important thing to do, just one moment, and hopefully we can save our questions for the end. I don't recommend making any changes to the RSI 14 setting. We're going to just use it as the general settings instruct us to. So back to the stochastics. All right, so just like the RSI, when it's above 80 this time, it's going to indicate to us overbought conditions, and below the 20 would indicate to us oversold conditions. Not only that, we have these two lines here, and they're similar to the MACD lines. And what we do is once these lines go below the 80 or the 20, is we wait for them to cross, and that's when we take our trade. So this strategy is best for usage on our 60-second platform, and you have to make sure you're using a 1-minute chart. So let's get set up with the platform here. Okay, you want to make sure that you're on the 300. And now we're going to look for the right asset to take. And that would mean we need both the blue and red line to be outside of what we call here the danger zone. So either above 80 or below 20. Let's see what we can find. Okay, perfect example right here with the AUD USD. I'm going to quickly grab this trade before it is too late. And we're starting with our lowest amount. For those of you with regular account, it'll be $5. And well, you know what? Okay, no. We will take this opportunity. I can see when you see a lot of crossovers like this, there is some added risk, and it's indicating to us very strong downward momentum. I'm going to look for just maybe one more example, and we'll use this if we don't find a better one. Yeah, this is going to be a better example for us, is the GBP USD. So let's just wait now for these lines to cross. And once they cross, we are going to take our trade. We're going to get our smallest amount ready, and it's going to be telling us to take a call position because right now the asset is showing oversold conditions. So we're just going to sit here and wait for these two lines to cross. So while it's happening, okay, and we are about to have the cross. I want to see them actually cross over one another. Just wait a moment. The blue line will be crossing above the red line momentarily. And we have our cross. So we would take a call position there. And immediately we're getting our next value ready, which is 50 for VIP accounts, and for regular accounts to be 10. And our concept here is, say the asset continues to go down. That means my trade would turn out of the money and turn red. So that would also give me an opportunity to grab a better strike rate. And if I would grab a better strike rate at a higher price, it increases my chances to not only cancel out any prior loss from this trade, but also give me a chance to profit a little in the end. So right now we already have our asset increasing. We're deep in the red, but okay, and the price is coming back down. So never speak too soon. We're going to wait this one out. We do make sure we're using the 300 seconds here. All right, we have strong downward momentum. Now, usually we would wait for at least 5 pips difference, and we have plenty more. Hold on one second here. No, we're tied right now in the gray. Okay, so we're gonna wait for at least 5 pips, but since we have a lot of time, I'm only gonna take that trade if it's say 10 or more pips. But let's see, maybe we might not even have to take the trade. So let's just be patient for a minute here and see how this plays out. And it's just teetering here. We did happen to catch this at a strong support level or something. Okay, so we do have at least 5 pips. So I'm going to go ahead and take our next trade. So I'm immediately going to get the next value ready. Now, I have if this stays green and this stays red, even if this loses, the winning from this trade will more than cover the loss from here. Obviously, the best the best outcome would be that we win all the trades, but that is actually not the purpose of this strategy. It's just to make sure that we win the last and biggest trade. And that being said, we do have to make sure that we have the right account balance to properly do this strategy all the way through. Say the price did go against us for a long period of time, which can be more than a half hour, and these are only 5-minute trades each. This is really how much you want to make sure that you have in your account. Regular account would be $10,935, and a VIP account would be $54,675, because these are the values in which the trades increase. Okay, so we can see we have a very strong downward momentum right now. So, but our bigger trade is still green, and that's okay. So we have much volatility. Let's see how this plays out. And we could take the trade right now according to the 5-pip difference. However, it is important to use this time that we have here. We're merely waiting out this downtrend. All these trends, they always have a reversal. We merely just have to play the waiting game right now. Yes, we can grab a much better strike rate, but I don't want to run out of the time that we already have with these trades. It's important to use that time effectively. And at this point, I feel like this price is too good to pass up. But it's climbing back up. The second I want to, if it goes below 38, 40 here, that's what I want to take. I'm going to hold out. If it approaches 30, I'm going to take the trade. Otherwise, I'm going to just give it a little bit more time. And we do have a lot of economic events happening today. It is actually a problem that we have a speech from Janet Yellen, which could be drastically affecting our session here. This is a session that's based purely on technical analysis, and to actually do it 100% properly, you need to make sure that there are no big fundamental events going on. And we do have Janet Yellen from the U.S. Giving a speech today, so that could certainly be impacting our trades right now. So it does look like we are going to end up losing that first trade. I'm going to go ahead and put in our next trade at this price. And get my next amount ready. Well, Janet Yellen is messing with our trade directions today, but never fear, we do have a couple more values here to cover our trade positions. So I have a lot of time here as well, so I'm not necessarily going to panic yet. Right now we're waiting. We're waiting to see if the price does turn around. If it doesn't turn around very soon, maybe once the clock gets to the halfway point, then I will, if it's preferable down here, to take the next position. And honestly, this is just too, well, I said I was going to wait until the halfway point, but this is too good a strike rate to pass up. So I'm going to go ahead and take it. And immediately get my next value ready. Now for the last couple values, I'm going to play it extremely slow. I'm waiting for this trend to pass. And we have had a lot of upward momentum in the GBP USD today, so this could actually play out either way for us. And we are very close to our strike rate here, so we're just watching. There's no action we should be taking. Okay, so the price is continuing to drop. But at this point, it's very, very important that we use the available time, regardless of how attractive a strike rate might appear to us. We do have a favorable strike price right now. However, I really want to use this time. And these are the multi-crosses that you do tend to want to stay away from. However, in hindsight, there's not much we can do. But it's not over for us yet. We do have some upward momentum beginning. So as long as our biggest trade remains green, then we will be profitable in the end. Okay, so at this point, if I do see 5 to 10 pips difference, I'll probably take a trade, and we do have that here. So I'm going to grab myself another call position. And immediately get my next amount ready. We do have almost another 5 minutes for these trades to expire, and all these 3 candles are getting stopped out in similar places. It's indicating to us some support down here. So Hopefully this candle's going to turn in the right direction for us, and maybe not only will we capture this trade, but maybe this one as well. We have to get up to here. If this red candle if this can turn to a green candle and surpass the red candle from before, then we can actually win both trades. Or the market could decide to go in the other direction. But let's see what happens. Looks like we have a big fight between buyers and sellers in the market right now. So we're just going to wait this one out. Once again, I do recommend checking economic calendars and news for any economic events happening throughout each day before using this technical strategy. Because you do see very much downward momentum here. Usually the stochastic indicator, once it crosses, the price goes right back up like it did over here. Even over here, we see it cross and then the price comes back up. Right now, there must be some strong fundamental news going on in the marketplace, and unfortunately this is the time we had scheduled for our webinar, so there's not much we can do to work around it. Okay, so as long as we can hold on to some of our gains here for the next 137 seconds, then we will be profitable. So let's just wait and see what happens. Okay, we're probably going to have to take one more trade. We saw it come down to 60, so I'm going to wait to see if I can get 60 as my strike rate. If we do have to take that trade, however, it would be nice if we could end here and just win on this one. But we do have a big fight in the market right now, and the next 80 seconds are going to be very choppy. Looks like this is going to be a very close one. Okay, I'm going to take that next trade, and the price is continuing to drop. So we'll line up our next trade amount. Now we're on our last two, and we really want to use our time effectively now. So we do have a bit of waiting here since we just started another 5-minute trade. So let's see how this plays out. There certainly is some support here, but there is a very strong fight between the bears and the bulls. So this is probably due to some economic news, which I don't recommend using this strategy during such times. So we do have a big drop. I want to use this time effectively, so I'm not going to take a trade for at least a minute or two. trade is teetering between winning, losing, and tied. So let's see how the next couple seconds play out. This may be the turning point we were hoping for, which, happened very late. But let's see. It's not over yet. It's actually far from over. Another 2 minutes to go, and we are looking pretty okay. As long as we can hold on to at least some of these gains. We did come in right about here. So let's watch for the next minute and a half to see how this plays out. Just over a minute to go. We still are about 11, 12 pips in the money. But we do see extreme volatility with the GBP USD right now. Usually it's a much smoother experience. Very rarely will I get even past the first 3 or 4 trades. We are now on the 1, 2, 3, 4, 5, 6th. And as long as we can hold on to these gains for another half a minute, we'll be profitable. Feeling a little bit better now that the price has shot up. So let's remember the number 7128. Well, let's just watch for the next couple seconds here to make sure, because the price is coming back down. 7128. Just to confirm, is our winner. 7128 is our payout. Let's just quickly go through this and see the amounts that we used. 40, 50, 13, 50, 450, 150, 50, and 25. All 1, 2, 3, 4, 5 of these trades did not bring us any returns. Only the last trade brought us a return of 71.28. So in the end, we made just over $1,000 profit. $1,053 in profit in just 25 minutes. So that is exactly how to trade on our 60-second platform using the stochastics. So that was a very great opportunity for us. It was a little shaky in the beginning, but we did come out on top, and I think my point has been made. So I want to open it up to a couple questions. We do have just a couple spare minutes here before ending the webinar. So those of you not sticking around for our Q&A, I want to go take this opportunity to thank you for joining us for today's webinar. And I also do hope to see you back next week. We're going to be elaborating on our RSI techniques next week. You should all receive an email within the next 1 or 2 days with a registration link. So right now I am waiting to see if anyone types any questions. And for those of you who can't think of questions now, would like to ask them later, I'll leave you with my email address. One moment. Joseph, Geo at PlusOption.com. So feel free to drop me an email with any questions. And no one seems to be asking any questions right now. So I'll wait another minute. And if there are no questions, then we will end the webinar. No one? Okay. So thank you everyone for joining me today. I hope you all have a great weekend, and I'll catch you all next week. Bye now.